Now we can round out the conversation with India, China, and before we dive in, same thing over again. Please share, please subscribe, please like us. You know, we want you to like us, even if you don't agree with us. Just appreciate the data, appreciate the work, and help us try to keep this as robust as it is. So just to kind of pick back up when we talk about China, just because we do have a resurgence of, some festival activity. Things have gotten better. We've had about almost anywhere from an 8 to 10% increase in refinery activity within India. But the problem is the non-performing loans. So the non-performing loans is the one that continues to be kind of these headwinds as we look at these emerging markets, because as when you start to see non-performing loans, it means that you have an increasing bad debt expense. And all that means is that the bank has to keep more cash on the balance sheet to secure themselves against these non-performing loans, because if they have to write them off, if they have to write them down, they have to make sure that it's not going to essentially make the bank insolvent. So as you see an increase in those debt ratio, in the sour debt ratios or the non-performing loans, that means that there's less money that can be lent out. There's less money to be circulated, and it's just going to put and slow down the overall economy. And especially as we look at just this robust nature of, well, how quickly can we get to the other side of this, which is why we think India is going to continue to struggle, especially as we go into 2021. Now, when we look at the GDP forecast, one of the areas that we've always been very consistent on is Vietnam. And Vietnam has the benefit of being on the receiving end of companies leaving China. Samsung, Apple, Taiwanese Semiconductor, they've all announced new facilities in Taiwan as we get this move away from China, which I think is going to put a bright spot in the overall market. So Vietnam remains a focal point. And then on a selfish level, our private equity fund that we're raising capital for now, when we start to go international, Vietnam will be a focus. So it's just kind of giving you an indication of why we think that. China, we've gone through some of the data points, and I mean, if you want to believe Chinese expansion, okay. Do I think it's negative 4%? No. Do I think it's closer to give or take around zero? Probably, given the amount of government support that's been coming in. But when you look at just the overall aggregate, there's just an inherent problem. Then as we go into Korea, US, obviously Italy, India, a lot of these areas continue to be on the tail end, or see these headwinds, propagating that it's just going to remain not only into 2020, but into 2021, especially as we look at additional lockdowns in some of these European markets. Taiwan is interesting because we see an additional conflict between Taiwan and China. The U.S. just agreed to sell about $1.4 billion worth of Harpoon missiles, which is just anti-ship missiles. And this is very obviously hugely problematic when we look at the relationship between U.S. and China, but we'll talk about that in a bit more, because the rhetoric is getting worse, even as which I think is only going to accelerate after the election. Now, when we look at U.S. agriculture exports to China, they continue to increase, and they'll continue to increase through 2021. That is not something that is to be ignored. But when we look at actual exports year to date, and then the pace needed to hit the target of the January 2020 trade deal, no, like it's just not going to happen. And we'll go through in a bit more depth why. Just because we're going to look at it in different perspectives and different pieces, and we're going to compare it to 2017, which is really the base that these estimates were used off of. But even with this huge acceleration of imports from the U.S. to China, they also are buying a lot from Brazil, from Argentina. So and then we'll actually show that there's actually more coming from not U.S., which is an inherent problem. If you think about, okay, well, was the deal on phase one successful? No. Does this mean that phase two is impossible? Well, let's understand how we can rework phase one. And it's something where when I look at the generational dynamics, when I look at the cycles, I just don't see this moving in a positive direction. I've posted before in our May 29th show some of my views on how the U.S. relationship with China continues to deteriorate. I will post that again in these comments just because I think it's important to reiterate. And it really kind of highlights that we've really we've been right in terms of the trajectory of the relationship that we really don't think gets much better, but we'll just rehash that because I think it's worth talking about. When we look at India or as a whole, it's important to look at the different dynamics, and these are some of those high frequency data points. Each one of those is an index in Bloomberg that comes from some outside sources. So the new COVID cases continues to get better. You can see the new active cases are dropping, which is obviously a net positive, and the lockdown index has loosened up, which again comes to more activity, more economic growth. But again, what does the future look like, and as we go forward and as we look at, okay, well, how excited should we be? Is there something that's sustainable? And over the next few weeks, the banking liquidity, we think, starts to struggle as we see, again, that those additional bad debts getting a little bit worse. But the bigger issue is going to be how are cases doing as we come out of the festival, as we come out, and what do things look like as we go into 2021? Because imports, exports are going to be a very big problem, especially on an Indian level when we look at the export side, or how are exports doing, because we have the developed markets that are going back into some sort of lockdown or restriction, which will be an impact overall to just Indian exports and just what does the health of their economy look like. Now, and don't get me wrong, people are going to be looking to get away from China, which is going to be a net benefit not only for Vietnam, but also for India. But it's something to keep an eye on to see, okay, how are things progressing? Because that lockdown index getting softer just means that there's more abilities to move around. We'll see some of that distillate start to move through. We'll start to see some of that refinery activity continue to pick up. We still see slowdowns in terms of exports of products from India into the overall market. But again, we're seeing some more consumption within the country itself. Now, when we look at holiday spending in China, it's one of the things when we talk about Chinese economic expectations. What does GDP look like? And this is where we look at the overall growth, because when we look at National Day, Mid-Autumn, which is Golden Week in October, you can see that clearly things were better from April and May, but we're still down 30% year over year. We're still down 20% year over year on the number of tourists and the total revenue. So not only did did tourists get a little bit better, they still spent less. And it's not only because they're concerned about jobs, but it's also the amount of money that they have in the bank. What do they need and to worry about going forward? And this, again, comes back to the health of the economy. Now, given the government continues to prop it up, exports remain very strong, and we did see an increase in imports, but again, exports remain elevated. But the consumer locally is the problem. We've seen a debt transfer from banks more into the consumer space, and this is going to be the headwind as we go out, as we project into 2021, 2022 about Chinese GDP growth. This is an overarching headwind because I don't think it's appreciated at how weak the consumer still is following lockdowns, following job cuts, and just where they still are an export nation and their biggest clients are not buying. So what does that mean as we go through the remainder of the year and into next year? And this is just showing you that their local consumer is not going to make up that number. And when we look at just Japan kind of rounding out that export component, Japanese bankruptcies have fallen to 6-month lows through September. And it's just the BOJ has been very aggressive in stimulation, easing, trying to keep things afloat. And you've had a build out of cash hoards that have increased within the Japanese companies, which has created a bit more of a security level as we look at kind of where they sit going forward. Japan, again, remains kind of, I don't want to say a nothing, because obviously it's the third largest country in the world on a GDP level, but there's not much to say that there's going to be a huge increase in Japanese growth or kind of a slowdown. It's just going to be relatively here with the BOJ trying to prop up as much as possible. Now it's time to really dig into just import-export data. So let's take the Chinese import data for 2020 versus 2017. So the chart on the left looks at imports from U.S. products covered by the phase one trade deal. So the 2017 actual purchase is that, call it purplish line. And then the purchase commitment was an increase above that. So the setup was, this is 2017 was the baseline, and you have to purchase 20%, 25% above the 2017 levels. They're not even at 2017 levels. So that's why when we look at the ability to hit the number that was expected by the birthday of this phase one deal, which is January, you can see that they are well off pace as we look at the U.S., and there's no way for them to close that gap. You could buy as much oil, as much and LNG, as much grains as possible. It's just they physically cannot reach that number unless we get some massive price surge, and then they're buying at a higher price. Because remember, this is price value, not amount. But when we look at imports from the rest of the world that are covered by the phase one trade deal, they're actually buying more versus 2017 from other entities. And they're buying it from the rest of the world. So this comes back to, well, we tried to create a trade deal, but yet you're supposed to buy more from us. You're not. And instead you're buying more from others. And it comes down to price. Like if prices get too high in the US, they'll buy from Brazil. If prices get too high from the US, they'll buy from Saudi Arabia. And this is what we keep seeing, where they're buying more, but obviously not from the US as they pivot away, which is going to become a much bigger issue as we go into the remainder of the year and as we start to come into post-election of, okay, well, how are the candidates saying this? Did President Trump get elected again? What is he going to say? Because this is his deal. What are we going to do to fix this? If Biden gets elected, what is he going to do to fix this? Because clearly there is a backdrop. There is an issue with the way that China is carrying itself in the world that is far from a WTO standard and other standard, as we've shown through Hong Kong, Uyghur. Which, again, the U.S. just claimed that they put them as genocide, saying that what they're doing in the western part of the country against the Muslim minority is genocide. We have all of these issues coming up. Again, these are things that don't go away. They only get worse. And the question is, how does that change with the different presidents? Just came out, just because I wanted to say it as it happened. French President Macron imposed a new nationwide lockdown, clamping down on movement as the rapid spread of the coronavirus increases. The lockdown, which will start on Friday, comes less than a week after France's extended curfew. So as of Friday, we will get another lockdown, which France's stay-at-home order is part of the series. Again, this is going to be a bigger problem. Now back to the fun topic of Chinese trade. So when we look at just the covered components in terms of all covered agriculture, all covered energy, and then what this looks like in terms of imports from the U.S., again, back to the original chart. So here you can see the actual purchases. We've now crossed over, and there are now buying more actual purchases on covered agriculture. And that's only going to increase as we look at corn, as we look at soybeans, as we look at a lot of these other products going into the Chinese market. And it's more because they have a huge shortfall based on armyworm, locusts, drought, flooding in the Yangtze River that we've talked about ad nauseum in our Three Gorges Dam episodes. So it's just there's not enough time to reach that huge increase, as a lot of the new purchases are slated for December and January. Then we look at covered energy. You can see that we've crossed over as we got a big increase in purchases through September, which also we had the biggest increase. They set a record in September purchases of oil. That it continued through October, through not only PADD 3 or the Gulf of Mexico, but also Alaska. But again, you can see that the disconnect between the two, which is just going to remain the overarching problem. And there's really no way on a flow level at this barrel, at the current volume pace and at the current price, that they could reach those numbers. And then clearly the imports from U.S., you can see that just because this also includes manufacturing and other types of products, that is just not meeting expectations or even 2017 levels, except for these two, which will remain fairly strong as October numbers come out. But then things start to slow on the oil side in November and into December, especially as prices come down and the current spreads keep us from really exporting into the market based on the tightness. But as we go in a bit more detail, we're going to look at agriculture and shine a light on that. So when we look at just the number of filings of bankruptcy before, again, just kind of rounding out Chinese activity, the weekly number continues to exceed the 2019 levels. I can't stress it enough. Like, this is why I'm so concerned about really what their actual numbers are, what they're saying the growth is. And this is when we start to peer into, okay, well, what is the consumer thinking? Do they have money? Do they have the ability? Clearly, people are going bankrupt. Clearly, there's a concern about jobs, which is going to keep the overall growth within China muted and depressed overall, not only at consumer level, but also investment on the corporation, which is why, and we'll talk about this next week because right now they're having their Congress. And we're going to get a new 5-year target, and that'll come out with great detail, and we'll kind of pick apart what this means and how are they going to address bankruptcies, especially on the private side. Now, looking at Chinese agriculture imports, up across the board, it's only going to continue. There's the strength is robust. I mean, look at pork, look at wheat, look at corn, look at soybeans. Soybeans is the one that I think is going to see the biggest increase overall. But obviously corn and wheat and pork continue to be the biggest drivers. And this is something where it's so far through September, this will increase as we go into the end of the year, which will be a nice bright spot, especially for our farmers. And again, coming back to what we talked about with the EIA show, looking at hopper cars and what's happening with the movement of rail at this point. U.S. net export sales, again, they continue to move higher. Trade estimates continue to either beat estimates or come within the higher end of the midpoint. Corn, soybeans continue to be robust. That, again, coming to the whole soybean thing. And then the net export sales, and again, this goes into 2021, we're actually seeing them go into Latin America as well, because Latin America, there's an arbitrage. Brazil will sell to China and then turn around and import from Uruguay, import from the U.S., and these are things that we continue to see. But these numbers are going to drift higher as food shortages remain a problem on a global level. We've talked about this continuously. We'll continue to talk about this because food inflation is a huge problem when we look at developed nations, the growth of those nations, the economic strength of them. This is going to be something to look at. Now, when we look at China September soybean imports and origin, this is when we were talking about where a lot of this is coming from Brazil. So far, the U.S., they're below 2019 levels on the imports. That flipped in October. So right now, this is actually in the positive range. But when you look at Brazil, China is just taking anything and everything they can get from Brazil, which is, again, creating a shortfall in the market, which the U.S. is able to backfill as they're selling, as Brazil sells to China. Then the U.S. can sell to Europe, parts of Africa that maybe Brazil might have been selling into previously, really because we have this net shortfall in the overall market. And then this is just U.S. weekly inspections. You can see that last week versus the actual, and to just kind of where we sit, the year to date, year over year, we're at up 75% corn, up 78% soybeans, wheat up 4%. Again, the numbers are going to continue to surprise to the upside, specifically in soybeans and corn. Pricing has pared back a little bit just because we've had a decent rally in overall pricing, and some of the slowdown is here. Obviously, it's a risk-off day with a lot of concerns about the overall market as we get additional lockdowns. Now, just looking at China and kind of rounding out what they look like in sub-Saharan Africa, because as we talked about poverty, we talked about rising food prices, we've talked about issues in Africa as a whole. China has a huge exposure to them when we look at the lending that they've done over the years and what this looks like into 2021. So Angola, Ghana, Kenya, Ethiopia, Mozambique, Nigeria, they have a large amount of exposure, which is why when we consider what is China doing, they have a lot of bad debt expense. That bad debt expense is increasing. How many dollars do they have or foreign exchange do they have against that bad debt? This gives you an indication of why we care so much, because there is a lot of debt outstanding in countries that are seeing poverty increases, issues in terms of overall impacts. Nigeria, we continue to have riots. So far, it has not impacted oil infrastructure, but the riots are against, not enough food, not enough jobs, police corruption, the government not doing enough. And these are things that are going to continue. Generational dynamics has been spot on. Nigeria and Mozambique are going to continue to see additional strife and problems as we go not only into the end of the year, but as we go into 2021, which is going to be something to watch as poverty increases, food prices increase, and just the anger within those countries rises. So thanks again for watching. Coming up, we're going to have our favorite on Friday, the primary vision frac spread count. So stay tuned. Hopefully you found this educational, useful. Hopefully we can have a good conversation about it. If you have any questions, please drop them in the comments. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.